Yeah, so tonight we're going to be covering the overnight trading strategy, which I'm super excited to go about. Tonight we'll go into a little bit more detail on the statistics of how it's been doing, how it's been performing. I love this call because this is one of my favorite strategies. I've got three different prop firm accounts trading this strategy right now. Actually, three that are funded and one that is in process of becoming funded from the overnight strategy. And I also trade a couple of personal accounts as well. So, which only trade the overnight strategy. So, I've definitely put a lot of investment into this system, and I definitely believe in it. And I love that I love the simplicity of it. It's so easy. Anybody could trade it as long as you put together 10 or 15 minutes a night uh, to to trade. Anybody could do this. It does require a lot of discipline. I think this is something that a lot of people don't necessarily anticipate, right? And so tonight I want to kind of go over what that discipline looks like. Let's go over the scenarios, the good times, the bad times. I want to cover everything. Okay. So we got, a little less than an hour to go through it, but I think that should be plenty of time. In fact, we may wrap up early just depending on how we get through the course material and things like that tonight. But the goal tonight is a couple of things. So first of all, we will go over the methodology, like why we trade the strategy, the details that way, like why we trade the overnight system, why it works, how it works when it doesn't work, how we deal with that. And then I want to go over into the very specifics of the application. So like actually going through the process of taking the trade in your trading account, to the lot size calculator, everything that entails, the timing of those types of things. We'll go in that part. That might take a little bit of time to go through that, probably 20 minutes. And then lastly, we'll answer any questions that you guys have. And then of course, we'll go through the updated statistics of the strategy, which is always fun, especially for those of you that are either for the first time deciding if this is a strategy you even want to trade, or for those of you that are old timers and just want to keep up with how it's doing on a long-term basis. So anyway, let's jump right into it. Before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and jump into this. So first of all, like I said, I want to go over the methodology of the overnight trading strategy, what it is, why we trade it. Also, for those of you that are new, or those of you watching this on YouTube, you guys can actually read my book that I put together on the overnight trading strategy. So if you go to the website, if you go under members, so you do need to have any level of membership will actually get you access to the overnight trading strategy. Even the 14-day free trials will get you in. Obviously, if you're live and you're a member of the program, you'll have access to this. So if you click on overnight trading, there's actually a little book here that I put together that you can read on the strategy right here. It's best if you read this on a laptop. I've tried to read this on a phone, specifically an iPhone, and it just doesn't work very well. So like if you want to read this, just click on the full screen mode right here, and then you can just turn the page. And like I said, it's like 14 pages. And it'll just go through the entry, the exit, the sequence multiplier. Um, Here's the exit of the strategy. Let's see. Let's keep going. Here's a video that I put together specifically for setting up the overnight trades. Yeah, and it's pretty simple. So cool book. I appreciate that, Roger. Good book. Good book. And then actually right here are the up-to-date results on the overnight trading strategy. So you can actually come in here and see, like we trade three different versions of it. And you can actually see the win rate, the gross profit, gross loss, net profit. You can see the average win to average loss. You can look at the RR ratios of each version of the strategy. So that's pretty cool. Here's the actual transaction history. So everybody can view this, which is super awesome. So it's super transparent this way. One of the things I love about the overnight system is that like everybody, each one of us is trading this together. It's not like me just being like, hey, here's a strategy, go figure it out. It's like, no, we're definitely super involved. We're working together, trying to figure it out together, which is super awesome. Okay, so let's go back to trading views. So what I want to do is explain how this works and why we even trade this. So first thing everyone needs to know about the overnight trading system is like, what does it mean to be an overnight trader? Because most of you here tonight live here in the United States or Canada. Or I know we have some people from Mexico too, and we also have several people who are watching from like Brazil. Um, but the um, but most of us kind of live on the Western Hemisphere. Now, I do know that on YouTube we get a lot of viewers from Australia, New Zealand, or London, and so or like South Africa, and so this isn't really an overnight trading strategy for you guys. And I'll teach you. It's more like a day trade for a lot of you guys, but we call it the overnight system because by and large, for me and 80% of our audience, this is a strategy that's traded before we go to bed and we wake up to the results. And the reason why we trade this system is because while those of us here in the United States are asleep, that's when the London market opens. It opens at 3 a.m. Eastern. And I don't know about you guys, but I don't want to wake up at 3 a.m. Eastern. Okay. So it's super late for me. Actually for me it's actually at 1 a.m. It's not as bad, but yeah, if you live in like Virginia or Florida or New York or something like that's just not going to be fun at all. So um, but here's the deal though. So London, like if you think about in forex and futures trading, forex and futures, it's open all the time, right? And so London is actually the biggest trading session out of all the trading sessions. All right. So 76% of all the trading volume that happens in a day, which by the way, it's a $6 trillion market, nearly $7 trillion market daily, of that 6 or 7 trillion dollars, 76% of all of that, we'll just say 4 trillion, make it easy, transacts during London. So literally while I'm asleep, I'm missing the greatest price action of the market. And so that kind of stinks, you know. It's like, dang, I'm gonna wake up and half the day's already over, even if I wake up early, especially for me, because by the time the New York market opens in Forex, it's already 6 a.m. over here, 8 a.m. Eastern. So not too bad for, not too bad over there. But yeah, if you live in California or where I live in Utah, you have to get up super early to be able to capture the it's just inconvenient. So there's a lot of advantages to the overnight system because it's a set and forget system where you set up the trade in a strategic way and you do the same process every single day with the idea that eventually one of the nights or a couple nights a week you're going to hit a pretty nice win. And when you hit that pretty nice win, it's going to make up all the difference. Like any losses you've had up to that point will be covered, plus you'll be profitable. And that extra money is gravy for yourself, which is awesome, which is why we trade. Obviously, we want to, at the end of the day, be left with a net profit, right? Just like any business you would run, right? You run a business, you want to uh, be profitable. The way you become profitable is to limit your expenses and increase your revenue so that you're left with a net at the end of the day. And so that's what we want to be left with is a net, not necessarily at the end of the day, but maybe at the end of the week or at the end of the month, ideally. Definitely at the end of the quarter, you want to be profitable every single quarter. We never do, which we've never had. I've never had an unprofitable quarter with the overnight system. Actually, up to this point, I still haven't had a negative month, but we're close on October though. So we'll see because we're at the end of October. We'll see how that ends. We still have another day or two to trade. So we'll see how we go from here. But anyway, okay. So back to this. So London, big session. If you live in the United States, you're at a huge disadvantage to take advantage of that unless you have a system like this to capture the breakout of London. So here's another interesting detail about how the London market's traded. So in a 24-hour day, there's four trading sessions. You have London, Sydney, Tokyo, and New York. Okay. And the trading day actually begins at the start of the week. Sydney opens first. Okay. Sydney opens at 6 p.m. Eastern on Sunday. A couple hours later at 8 p.m. Eastern, Tokyo begins and they overlap for like 6 hours. Okay. Then Sydney will close at like 2 a.m. Eastern and London will open up at 3 a.m. Eastern. And then Tokyo closes like at 4 a.m. Eastern. And then Like 8 a.m. Eastern, you get New York that opens in Forex and futures, and then that goes until 5 p.m. Eastern. So and that's like a trading day. Okay, that's essentially what you're looking at each day. Now, the interesting thing is each one is not created equal. So, obviously, during the Sydney session, what would you expect to be moving, right? So, you got the Australian dollar, New Zealand dollar. That's going to be more of an emphasis during the Sydney session. During the Tokyo session, the Japanese yen would be a natural currency to be trading during that time. During the London session, the euro, the British pound, the Swiss franc, those are more natural. When New York opens, the US CAD, US dollar, and the CAD are is a pretty common, those are common currencies to trade, right? So of those four sessions, though, like I said, they all trade different currencies. Kind of like the volume that's associated with those four sessions is different, and the currencies of which that are traded are different as well. And so Sydney is actually the quietest session. When I say it's the quietest, it means that the market doesn't move a lot during Sydney, just because there's not as many global banks that are situated in Sydney as there are, say, in like London or New York. Okay, London and New York are kind of your two big hubs. But Tokyo can be a pretty big hub. Singapore's a hub. Sydney still is a hub, but they're just not as big. And so naturally, you don't see a lot as much movement during that time. So what's interesting is that Sydney is open during our evening time here in the United States. So Sydney, like I said, it opens at 8. It opens at 6 p.m. Eastern. So that was like 2 hours ago. Okay. And it closes at 2 a.m. And it's the quietest session. And we've already established that London is the most active session. So, like $4 trillion floods through the London session every single day. Okay. And they are right next to each other. As far as where they are, they're adjacent to each other in a 24-hour day. So, you have the quietest, lowest volume session during Sydney. And then right after Sydney closes, you got London that opens, which is the biggest one. So you have anyway, they're just right next to each other. So you can kind of notice a difference between the two. Let me actually illustrate this on a chart. So I use an indicator called sessions on TradingView, which is actually nice. Jim and I actually figured out how to change the colors on this today, just a few hours or about an hour ago. We actually just figured out how to do this. Um, which I don't know why I'm technically I couldn't figure it out, but we figured it out together, which is cool. So now I've made my light blue a little bit lighter here for those of you that know what this is. So anyway, this is called Sessions, and I use it on TradingView. It's a little indicator. It's free, and what it does is it just highlights in this light blue area where Sydney is on the euro. So I've got the euro dollar pulled up, which is the most commonly traded currency pair in the entire forex world. Okay, and this is everyday Sydney. So we're currently in the Sydney session as we speak right now. Like it's actively happening during this call. This is the current market. This was the Sydney session yesterday. The day before, this was, I believe, Sunday. Yep, right here. This was Sydney. Yes, 2 days ago. This was Sydney on Thursday night, going into Friday. Here is Wednesday over here. This was Tuesday, right here. Okay. Now I want to highlight not just Sydney, but let me also go ahead and highlight the London session. Okay, I'm gonna turn on London so you guys can see this. Okay, so there you go. And let me turn on the brightness of London, which this is how you can do it, by the way, for those that are curious. I believe London is at the top. You just go to the background and you change the opacity. There you go. So green is London, light blue is Sydney. Okay. And my question to you guys is, and I've already explained it, but I want you to kind of look at this. Which one is more active as far as moving the market up and down, and which one is a little bit more quiet? And it's pretty obvious, right? I mean, like right here, one's a very obvious one. Like here's London. This is the London session on the euro, everything in that darker green. And then the light blue preceding that, this was the Sydney session, not very momentous at all. Okay. Yeah, here's London over here on October 17th, and then a lot more less activity here on dur during the previous Sydney. Okay. So that's what I'm trying to illustrate here, okay, is this concept of sorry, let's go back. Okay, here's the beginning of the market. Okay. So that's what I wanted to highlight. So let me actually turn this back on. So because that's the case, this is going to segue us into the meat of the strategy. Okay, so basically what we're trying to do each day, let me go ahead and turn off London now. The goal of the strategy is to connect with what we call the London breakout. So London is going to break out because you're going to get an avalanche of capital that floods the euro. It's going to flood the British pound. It's going to flood the franc. And it's going to send the market into some kind of breakout or frenzy. One of those two things is going to happen, guaranteed. You're going to either have kind of like a frenzy whipsaw, or you're going to have some kind of major breakout. Is base every single day you're going to get one of those two things. Okay, like clockwork, right? Um, and so what we try to do is we recognize that the market is going to create, you know, maybe once a week, couple times a week, some kind of breakout. Okay. And the breakouts are actually where you make money. So if you think about it, like just back to 101, how do you make money in trading? Well, when the market goes from one location to another location, if you speculate, like if you buy here and the market goes higher, that difference is what you make, right? That's the money you make in the market. If you sell here and the market goes down, that difference is how you make your money, right? And so the way you make the most money in trading is when you're able to capture the biggest breakouts. This is actually one of the biggest challenges that us retail traders have in the markets. Okay. Most retail traders don't realize that this is one of the biggest problems. Most of us, and I'm guilty of this too, like I'm not pointing anybody out because I'm just trying to help us realize some stuff here. When you're new to trading, most of us, like if you start having a profitable trade, it's so easy to just start taking profits. You're like, oh man, I'm up $50 or I'm up $100. I got to take this profit off the table. Or I'm up, if you're trading a bigger account and you're up $1,000, like most of us would be like, oh yeah, I'm taking that money, right? It's a huge issue, right? And so one of the things that's cool about this system is it helps us take advantage of those bigger moves and really milk the market when those come along because and you're going to see why in a second, but you really need those big days because most of us will settle, especially if we're new to trading, and we don't realize that it's a career ending move. But a lot of us will just settle for smaller profits, thinking we're doing okay. The problem is that a lot of retail trading strategies are designed to make you profitable for say um, like let's say you make money for 8 days, 9 days in a row, but then on the 10th day, you lose so much money on the 10th day that it all the money you had made up to that point is totally gone and you've lost, right? Um, and some retail traders will come back, and they'll try it again, get on their feet, they'll make money for another 10 days in a row, and then they'll lose so much again that it's like anyway, eventually you'll throw in the towel. I've actually thrown in the towel on those types of systems because I was like, I can't do that anymore. So I changed my mentality. Like, I actually the mentality behind this system is to capture breakout moves because that's precisely where London is where you can get them. Okay, London is where you get breakouts, and New York. Okay, the New York and London session is where the breakouts happen. Okay, so the kind of trades that are going to provide for you are going to happen during that time. So however you do this, make that your focus. Now, I'm going to show you how I do this, but you've got to capture those big breakouts. I've tried back testing the strategy like different ways where you go for less profit and try to get more frequent wins, but it always winds up like you could actually find a way to get more like a 60, 70, 80, 90% win rate. And yes, you can win more often, but when the big losses come along, it just wipes out your profits. So for me personally, I would prefer having a 35% to a 50% win rate on a strategy, which most people wouldn't want to touch with a 20-foot pole. But I would love that type of system, as so long as that system, when it does win the 40 or 35 to 50% of the time, when it wins, I want to get a lot more profit. And that's where we need to be. But the problem is, naturally, we're not programmed to trade that way. We come with all sorts of baggage and mental, I don't even know how to, just psychology that doesn't allow us to do that. So we have to overcome that. And so one of the ways you can overcome that is to have a system that you can't even look at because you're sleeping. Right? Like, it's just like you can't mess with it because you're just like you're away from the computer during the most volatile time. You set your stops and you set your risk management up, and you can just let it do its thing. So to me, this is actually one of the best ways a retail trader can overcome that thing that they don't realize they need to overcome. So anyway, so let's get into the more. So now I think that let's move on to the next segment of the call. Okay, so what I'd like to do now is, now that we've kind of covered the methodology, let's go into the specifics of how to trade this.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call, in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So let me actually go back to, let me show you like what the trade looks like each day. Let me actually go back to a pretty good trading day. Like, I'm just going to go back to find, like, I think this one right here was pretty good. Yeah, so this is a pretty good example. This was on October 21st. Yeah, so this was the Sydney session right here on Monday the 21st, right? So this was last week, okay? And what we do is we come in here when, in fact, let's go ahead and do a rewind. I'm going to do a rewind back to the 21st at the end of Sydney here, okay, on TradingView. And I'm going to box this up, okay? So I'm going to put a box around the Sydney price action, okay? So what I just did there is I just used a tool on TradingView to box up this price action. That's it. I just take the highest high and the lowest low, you box it up. That's all you're doing. Then what do we do is at the end of Sydney, so towards the end of Sydney, before you go to bed at night, you're going to come in here and you're going to place a buy stop and a sell stop. It's basically a butterfly type of trade. Okay, so I'm going to start with the buy stop. I'm going to click in the top right corner of my box, and I'm going to drag my stop loss to the other side of the box. Okay, and then I'm going to bring my take profit 5 times what my stop loss is. So about right there, you can see I got a 15 pip stop loss right there. it says 5 is my ratio. That means I did it perfectly because 15 times 5 is 75. And you can see it says 75 right there. That means I did it perfectly because 75 pips is my take profit, which is 5 times more what I'm risking on the buy trade. That's perfect. The next thing I got to do is exactly it's the same thing, just on the opposite side. We're going to place a sell trade in the bottom right corner, and I'm going to put the stop loss at the. We're going to put the stop loss right here, um, on the other side of the box. So if for your sell, stop loss goes on the top. If your buy, stop loss goes on the bottom. Then you're going to bring this down 15 to about 75 pips, or about 5 times what we're risking. So approximately there. About there is good. Okay. And there you have it. There's your butterfly or whatever you want to call it. And you can extend these out if you want. There's a projection. So now the idea with this is that now you can go to bed after this trade is set up. You still have to, I haven't taken the trades. I've just projected what the trade would look like. And so if the market breaks out tonight, we don't care which way it breaks out. It could break up, it could break down, whichever way it decides to break out when London opens. This can happen while I'm asleep. So now I can wake up. Let's let the market do its thing, triggers into the sell. And then, as you guys already know, this market just collapsed, and then pause. Okay. So you would actually make quite a bit of money if this happened every single day. In a perfect world, that would be amazing. So you would, you just, you set the trade up, and then as soon as you go to bed, like I said, that triggers to sell. And as that thing goes down, you're just making money. Boom, 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 boom. In fact, this trade ended up making approximately, from where the trade started on Monday, this ended up going about 41 and a half pips in your favor, and you only risked 15. That's a pretty good ratio. Not quite 1 to 5. It didn't go the 75 pips that we were hoping for, but it still went 41. And then what you'll do is, if you have this trade still open at the end of the day, you'll go ahead and close it for profit, before New York closes. So you're going to hold the trade for probably about 14 or 15 hours a day. Like, you'll set it up at night. You'll probably close it 14 to 16 hours later. It's kind of how long you're holding this trade for. Um, yeah, just basically in the last 1 to 2 hours before New York closes is when you would close it, and then you would start over the next night and do this over and over and over again. Okay. So in a perfect world, this would happen every single night. Okay. Well, obviously we don't. We all know that, right? But we can still be optimistic because there's a lot to look forward to, and there's a way to make this work, right? So it's all about making solutions. It's all about being a solution maker, right? And so what we try to do is take advantage of the perfect world scenario. But when it doesn't go perfect, what does that look like? So some days you could set up this box, and this actually happened to us last night. It's not fun when this happens, but it does happen about half the time, like 2 or 3 times a week. This is going to happen to you. So you just got to get used to it. But we don't know which nights the market's going to break out. I wish we did. Nobody knows when the market's going to break out. So if the market breaks down, triggers your sell, and then goes up, let's say it looks like this: the market goes down, triggers your sell, goes back up, triggers your buy, and then goes back down again. That's called a whipsaw. And the market's more of a frenzy type of day, whipsaw, consolidation day, whatever you want to call it. And when that happens, you lose both directions, and you're going to lose some money. And it's not fun because it obviously, is going to go against your, you have to lose money. But there's a solution to this. And I'm going to explain the solution to that, because there's a way to make money, um, amidst that non-perfect scenario. Okay. So I'm going to get to that part. So let me just kind of go through the different ways the market could work. Okay. So let me actually do a rewind back to, or let me just, can I do oh, there we go. Let's just go back to here. Okay. So some days, oops, there we go. Okay. So in a perfect world, the market will break either up or down It doesn't matter. We don't care. Could break up, could break down. Okay, that's one scenario. Another scenario is the market breaks down and then it breaks up and it just keeps going up. Okay, so you could wake up in the morning to a loss on your sell, but your buy is now making money. Okay. Another scenario is trying to think of another, actually, basically just three options. A, you make money on the buy or the sell, just breaks out hard one way or the other. That's ideal. Um, Another way is the market goes down, comes up, breaks down again. This is like a worst case scenario thing. You don't want this to happen every single day, but it does happen frequently, unfortunately. So, and it happened to us last night actually. So, but you just have to deal with it. So, okay. Any questions on those scenarios? So, I trade through this since we don't know which days the market's going to break out, and since we don't know which days the market's going to consolidate, we just have to trade through all of them. Okay, so every day you have a loss, you just move on to the next day and trade again. If you have a winning day, you trade again the next day. Now, here's kind of where things get kind of interesting with our strategy. And this is something that we authored because most people who trade the London breakout, like we're not the first people to come up with this idea. There's lots of other people on YouTube and companies that trade the London breakout. We're not the first to author this. What I think we are the first to, because I've never seen anybody else do this, is what we call the sequence multiplier. And so this is something that we put together um, that helps us traders get to a means, like it helps us get to the point of profitability with the system. Because the way we look at this is that statistically speaking, about once or twice a week, there's going to be some kind of breakout. And the other thing that I've learned and discovered over time in my 6, 7 months trading this strategy, um, every single day, because I've traded it in the past, like before that, but I've every single day I've traded it for like the last 6 or 7 months. But one of the things that I've discovered is that the market is perfectly random. Like it's like perfectly random. Okay. So what I mean by that is that it's so perfectly random that if you were to not, let's put it this way, because I'm going to spill the beans here. If you did not change your lot size, if you just kept trading this like normal every single day and you just use the same lot size without changing that, if you, it was just say you use one contract every single day, the market is so perfectly random that half the time the market would break out and you'd make money, and the other half the time the market would lose money for you because it would whipsaw. And so you would, in fact, just spin your wheels forever because the market's so perfectly random. In fact, if you were to just do, in fact, let me give you another little snippet here that I think will make sense about this. In the last 6 or 7 months, I've made 405 pips, which is not a lot of pips. Okay. When you put it into perspective of like 6, 7 months. Did I say 4 or 5? No, it's been 6 or 7 months. So in 6 or 7 months, I've made 405 pips. So there's been more breakouts than whipsaws in the last 4 or 5 months, but it is nearly like when you think about how many trades that have been taken, I've got 195 trades that I've taken in the last 6 or 7 months. To only have that means we're averaging like 2 pips per trade. That's what I'm telling you. The market is perfectly random. Like it's that good at being random. Okay, so it's just a cool thing that I'm just excited about it because I discovered this cool thing. Um, so that's not enough pips to make a living, right? So you have to make a living another way with this system. So the way we do this is through our sequence multiplier. So may I introduce you to the journal? So this is our journal, which we use to log our daily results with the overnight trading strategy. I've been using a 100K account for the last since May 1st. And since May 1st, this account has made a net profit of $24,000, which is great. Net of 24K is awesome. Um, there's been ups, there's been downs through that process, mostly ups, obviously. And I did that on 405 pips. So I made $24,000 on 405 pips. Kind of crazy, right? So it's like, if you think about it's like, in fact, let me do this real quick, the math for you. If you were to take $24,000 and divide it by 400, in fact, let's do the exact number, 24,421 divided by 405 pips. That's $60 per pip, basically. Which is a lot of, that means you'd have to use a lot size of 6 contracts per trade, which I don't do. Like most nights, I don't trade it a 6 contract per trade. I think I don't even know what my average contract is, but I think it's somewhere in the neighborhood of just a couple of contracts is my average contract size. So how did I make 24K on 405 pips? So that's where the sequence multiplier comes into play. So this is like our thing that we did, and this is how we improved the London breakout. Um, and so what we do is we use it's a form of martingale. It's not a pure martingale though, so I don't want you guys to think like it's a full strength, you know, martingale system. I've run a lot of back tests on this, forward testing, obviously, and it's worked great. There is a cap on how much you can lose. So, what I love about our system too is that there's a cap on how much you can lose on the strategy. We're not going to risk until you go ruin. There's definitely you know, plans in place to manage risk, right? So that's why I'm okay with changing my lot size up on each trade. Because in case that's a concern to some people, because I know it will be a concern to some. For others, it's like that's not a concern, and whatever it takes to make money, right? Like, great. But I just know that there's some very astute people out there that probably are looking for information on like, okay, hey, if you're increasing your lot size, you're increasing the stakes, thus you could lose more money. True, true. You could also make more too, which is what I'm on that camp, is that you can make more if you manage it correctly. So you have to control it. Most people don't control it. And so if you don't have controls in place, you'll lose money with martingale. So what we do is we use a sequence multiplier. So here is the sequence multiplier right here. I'm going to zoom into this so you guys can see it a little bit better. Here, let's zoom in. This is the sequence multiplier. Okay. So right here, what this does is it's we've got this column right here of days. Okay. And then we have these different types of sequences. Okay. So we have the 1.25 multiplier, the 1.5 multiplier, and the 2x multiplier. And the way this works is if you're starting out trading the strategy for the first time in your life, you'll risk 0.25% per trade on your first day. Most of us use what this middle one right here, this 1.5 multiplier, which gives us up to 6 days to get a winner. And you'll see how that works here in just a second. And so if you trade this and you risk 0.25% per trade and you lose on that day, you're going to lose money. So the next day you'd come back and you take the exact same London breakout trades before you go to bed, but now you're going to increase your risk on the lot size calculator to 0.38%. And then if you lose on that day, you go to 0.57, lose again, you go to 0.86, all the way up to day 6 at 1.94%, where we stop there. And we don't increase beyond that date. Just because statistically speaking, if you went beyond that date, you would lose over 10% of your account. But well, between 6 and 10% of your account. And so that's kind of my personal breaking point where like I'm okay losing up to 10% to make a lot of money, but I'm not okay to go over 10%. That's too much loss for me to feel comfortable. So I'd need to stop there. A lot of other martingale systems out there are happy losing you 60%, 70% of your account just to make you 5 or 10% a month. What we've been doing is averaging a nearly 5% return a month, but only risking a max loss of up to 10%, which I think is actually really, really good. Um, like if you can get a 50%, 60% return a year, and the worst case scenario is you pull back up to 10%, that is the worst case scenario. I think that's actually a really, really good thing when you look at it from a 10,000 foot view. In my opinion, those are great returns, and the risk is actually pretty low. If you also think about it, a lot of people invest like in their 401ks, they'll buy like S&P 500, like VU contracts. That's like the number one equity asset out there is to buy the S&P 500. And statistically speaking, if we're going to talk statistics here, the S&P 500 pulls back 10% once a year, and it has done so for the last 50 years. So, like, even your own 401ks on average at one point every single year for the last 50 years is going to pull back at least 50% or at least 10%. And then once every decade, it pulls back 50%. Well, like between 40 and 60%, it'll pull back every decade when there's a depression or recession like we had in 2008. We had a 55% pullback in the S&P 500, which you'll never have that with the overnight trading strategy. So in my opinion, I'm like, oh, I actually think in my opinion, this is better than that. That's why I've put a six-figure personal trading account on the overnight trading strategy. Plus, I've got several different prop firm accounts trading the overnight system because I believe in this, like this, and I'm not giving you financial advice. I'm not saying you should do this, but in my experience, understanding risk management and trading other things and being involved with equities and things like that, I love having control over my money. And I love that the way I've set this up is actually, in my opinion, less risky than even an S&P 500 contract, which is kind of the king asset out there that everyone just loves so much, right? So it's a bold claim, obviously. I wouldn't recommend it to everybody. For some people, that's not the right thing to do. Um, Especially if you're not somebody who's ready and willing to trade this every single day. Um, you know, People have 401ks and pension plans and they don't think about them for months. Versus like I think about my trading account every single day and I'm managing it every single day. And a lot of people aren't prepared to put that kind of investment and time into something like this. But if you do want to do something like this, I think this is an incredible avenue to go down. And I think we've really fine tuned it in a lot of ways. Okay, so let me show you the numbers here, like how this looks. So let's go over these statistics. Let me zoom back out again. So this is the sequence multiplier. You can actually see how we've done over the last couple of, let's see, can you see this guy? Let me actually zoom back in. I can't see that very well even myself. Okay. So let me show you like what a sequence looks like. Okay, so let me see a cut and dry sequence. I just want to find one that's just like loss, 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 win, just a cut and dry one. Like, okay, yeah, right here. No, actually, that one's not exactly what I was looking for. Um, well, okay, fine. I'll just use this one. Okay, so this one was on August 7th. We ban again a sequence. You can see at 0.25%. Okay. Lost on that day, lost $89. Okay. The next day, I traded it on the 8th. I got triggered into a sell. I also got triggered into a buy. Uh, Sell made a little bit of money, made $19, but my sell lost. It hit its stop loss at 0.38%, which was $380 on a 100K account. So since I lost on that day, on the 9th, I went up to the next level of the sequence, right? I went to 0.57. I got whipsawed both directions that day, lost both ways. Again, not a perfect world. So you lose both ways. So what do you do the next night when you go to set up the trade? You go to day 4 in the sequence multiplier, which is 0.86. So you're increasing by the tune of 1.5 multiplier, right? Like 0.86 is equivalent to 0.57, but 1.5 times. So if you 150% of 0.57 is 0.86. So that's why we risk 0.86% on the trade. And so that trade actually did win, but you'll notice that let's see, that the 12th won, but it wasn't enough money on the 12th to cover my losses in my sequence so far. So I made $662, but I was down 570 here, 570 here, and 380 here. So what I do on the 13th is I'll go ahead and risk the same amount again. Like I'll stay at the same sequence multiplier, 0.86. And I actually did lose one direction on that day. I lost on the sell, but the buy took off. It made 52 pips at 0.86% risk for a net profit of, well, not a net, the win on that trade was $3,194 on one single trade. Okay. On this 100K account. So now if you do equal sum, because again, think about it, this whole thing is connected. It's a sequence, right? You got the win right here, plus the loss on the other direction that day, plus the win from the previous day, plus the three other losses. Sum those together, and that's a net profit of $1,476. After losses, that's what you're left with. So it took you 4 or 5 days to basically make that $1,500, but you were able to get to that point and get that win. So the idea here, guys, so this brings us full circle, okay? Is we're trying and anticipating a breakout in London every single day. Statistically speaking, we recognize that it's not going to break out every single day. But within a, I don't know, we'll call it a 1 to 6 day period, there is statistically likely going to be at least one day where the market, the euro dollar breaks out 50 pips, 70 pips, 100 pips in a 1 to 6. We don't know which day it's going to be, but there's going to be a pretty big breakout. The other idea that makes this thing work is not so you're covering, number one, you're covering a lot of real estate. That's what we just talked about because of the breakout. That's number one. And then number two is by the time you get to the day that does move a lot of real estate, it's at more risk. So you're risking more money. So when you hit that win, you also make more money. So that's where this all comes together. So naturally, you'll notice as you go through the journal here, there's some days that are absolutely monstrous wins. Like here on August 1st, this was a monster win, $4,850. A lot of small wins though. Here's a minus 250, here's a minus 89, minus 380, minus $570. These get a little bit bigger as they go along the sequence, but we keep them all together. Minus 250, minus 250, minus 250, minus 250, lots of minus 250s. Some smaller wins right here. Here's a big win right here on the September 12th, $2,523. Decent win on the 19th. Pretty good win here on September 23rd. And then just a slew of losses right here. Some wins. Here's October 4th. You got a nice win there. Then a bunch of losses. This was actually our worst sequence that I think I've ever had in October. October has actually been a little bit of a rough month for me. So I started the month actually pretty good. First week of the month was great, and then it just didn't have a lot of wins for several days. And so I actually did get to day 6 of the sequence. I did get a win right here, and I ultimately decided to restart my sequence on day 6 just because I did get a nice little win there. And I just said, you know what? Okay, I'll take that win and I'm going to restart. So, and now we're doing great. We're back to decent. I mean, the breakouts still haven't been very big recently, but we haven't had consecutive losing days in a row that have been significant. There's always been at least some kind of win in between. And so right now I'm actually in the middle of a sequence right now with you guys. And for those watching this, maybe you're watching this for the first time and I'm in the middle of a sequence. So, by the way, get your questions in now because I'm going to start going to the Q&A part of this in just a second. But if I do an equal sum, I can go ahead and this is the beginning of the sequence here on the 25th. I got those two losses, this little win right here, not enough to cover the loss though. So we'll keep going. And then my two losses from today. So I'm currently down $930, a little less than 1% loss on my 100K account. And so tonight, I'm going to be risking step 3 of the sequence, which is 0.57, which is right here, step 3. And now here's what this looks like, guys. So let's say I have a stop loss of, say, 20 pips. And let's say it's a big breakout night. Let's say the euro dollar moves 100 pips and we capture that breakout. If that's the case, I would make $2,850 on the trade tonight. That's the best case scenario for me tonight, is to make $2,850. Is that enough money to close my sequence out successfully? Well, let's see this equals sum. Today's potential win tonight, the two losses from this morning, a little win from yesterday, plus the two losses from Friday. Yes. And that gives me a net of $1,920. And it doesn't even need to go 100 pips to be profitable. This could go, 60, and you still make $780 on your sequence, right? So that doesn't even need to go the full 1 to 5 RR. It can just go 1 to 2, 1 to 3, 1 to 4, and you still wind up closing your sequence out successfully. And then you would go back to 0.25, your default. So that's kind of what that looks like. Marty says the lot size calculator. Yes, this is how it works, guys. So every night you're going to come in here to TradingView. Let's say this is the trade that we're taking tonight. You're going to measure how big the Sydney range is. Okay, this is about 16 pips. You can measure that yourself using this measuring tool over here. About 15 or 16 pips. And it's fine if you do 15 or 16. It's not going to make a huge difference. You would go over here to the lot size calculator on the website. You go to free tools, and then you're going to go to, there's a drop down, and you're going to go down to lot size calculator. It's about midway down in the free tools. You're going to come over here, and you're just going to go through each field one at a time. First one is the euro dollar. Make sure it says euro dollar because we only trade the euro dollar. Deposit currency, make sure it's in your local deposit currency. Mine is the US dollar. And then I'm going to change the stop losses to 15 pips. Seems like it was closer to 15. Okay, that's easy. I just measured that out on here for my lot size, or not my lot size, for my Sydney range. Then I'm going to change my account balance to whatever my account is. I do 100, I trade 100K account in the for the strategy that for the journal. So 100K is what I'm going to put in. Leave this at the default, the pip size. The risk is wherever you are in the sequence. So if this is your first day doing this, you're going to do 0.25% per the sequence multiplier, which is right here. You can also read this in the book on the website. So on the website, the sequence multiplier is available there. Okay. If you're on, if today I'm going to go to 0.57, so I'm going to go ahead and change that just to 0.57 because that's what I'm going to do today. Percent risk. Leave the contract size at $100,000 per contract, and then you click calculate. And then this would be what I would use from each trade, the buy stop and the sell stop. I would use a 3.8 per contract or 380,000 units, depending on the platform. Some platforms use 380,000. Some platforms use, platforms use units. Some platforms use lot size. And I would risk $570, which would be 0.57% of a 100K account. Okay, so that's how you use, and then you would go into TradingView or into your preferred platform and take those trades with that lot size that you just computed there. Let's see. Anthony says, I'm sure you've considered this, but since breakouts are less common, have you looked into mean reversion strategies with the sequence multiplier? Okay, yes, I've looked into similar things. What I have looked into, Anthony, is like instead of since the breakouts are not as common, I've looked into things um, like instead of taking advantage of the breakout, we take advantage of the whipsaw to try to improve the win rate. And yeah, you do get like a 60% win rate if you try to take advantage of the whipsaw. But the problem is that the days you lose, it's so terrible. So like I've learned that it truly is better to be patient. It's interesting, right? Like the more patient thing is the thing that makes more money, right? Uh, you make more money when you trade the breakout, not the whipsaw, is what I've learned. I don't know if that's what you were asking, but that's what I've learned is that I did a back test, and it's better to do the take advantage of the breakout. One thing I wanted to show you guys real quick, I actually got to get going. By the way, I can't do the COT report webinar. I know this is last minute. I have someplace I need to be here in a little bit here this evening, so I have to take off. But this, I'm gonna just wrap up on this, and then we'll get going. So if you guys have any other questions, hit them up right now because I got to go. But I want to show you this. So right here, these are the statistics. So we're at exactly a 40% win rate, exactly right now. So most people would be like, "What the heck? Why would I trade something with a 40% win rate?" Well, here's why. $24,000 in 6 months, 24% return. That's why I trade 40% win rate because my RR ratios is 1 to 2.29 because my average win is $900 and my average loss is $386. That's why I do a 40% win rate and I don't trade. I wouldn't touch a 90% win rate with a 10-foot pole. This is where you want to be. And that, if you choose not even to trade the overnight trading strategy, you want to be with systems that win 40, 35 to 50, 55% of the time. That's where the profit is. But it only comes if you are super consistent with your average win being bigger than your average loss. That's the only way forward. So anyway, I just wanted to share that with you guys because retail traders stink at this part right here. And this is where the money is because they focus so much on win rate. When I talk to traders and they ask me, what's your win rate? They never ask me what this is. And it's a huge, and it's okay because I would do the same thing if I were new. So I'm not trying to point anybody out. I'm just trying to point out the thing that we all think about. Everyone asks about win rate, but nobody asks about this. But you have to ask about both. They're both important, but I would argue that this is probably the most important because what this represents is discipline. This represents patience. Win rate does not. Win rate is whatever, average win to average loss is discipline and patience, diligence, right? All right, guys, I got to go, but I appreciate each one of you. This recording will be up here tonight. So if you want to come back and review the content, just come back in like 30 minutes and you can watch the recording. Appreciate you guys. Have a fantastic evening and we'll see you guys in the next webinar.